This video covers Chapter 7 for Info 11.5. And Chapter 7 is on specialized functions. We're going to be using date, logical, lookup, database, and financial functions. So we're going to begin with date, logical, and lookup functions. You're going to learn about useful date functions, how to include a function as an argument inside of another function, and how to use the match and index lookup functions. All right, so let's begin with dates. Dates are stored as serial numbers, as we have learned before in I think Chapter 1 or 2. This method of storing dates enables you to perform calculations using the cells that contain dates. So the date and time category in the function library contains a variety of functions that work with dates. Today function returns the current date, and now function displays the current date and time. I think these are the two functions that we covered in Chapter 2. Next is the logical functions that we'll look at. So we test conditions in logical functions to determine whether a condition is true or false. If you have used the if function, you'll see that it's the most commonly used logical function. Excel enables you to use two or more functions together, actually, to perform complex calculations. You can use other functions within an if function to evaluate more complex logical conditions for multiple outcomes. Lookup and reference functions look up a value contained somewhere else in a workbook. VLOOKUP and HLOOKUP functions that we have also looked at before in Chapter 2 take an identified value, like the number of months for a certificate of a deposit, maybe to mature. It looks up that value in a vertical or horizontal lookup table and then obtains the related value, like the annual percentage rate, the APR. Excel contains additional logical functions to perform for more complicated referencing. Okay, so let's get into using date functions first. The date and time category in Excel's function library group includes a variety of date and time functions. You can use these functions to calculate, for example, when employees are eligible for certain benefits, what the date is 6 months from now, and what day of a week a particular date falls on. Okay, so you can calculate days and years between dates. You can calculate the number of days or years between two dates. For example, if you work for a credit card company, you might want to calculate the number of days from a payment due and the actual payment date. So the days function calculates the number of days between the two dates. The most recent date is entered in the end date argument, and the older date is entered in the start date argument. So you want to pause the video here to watch the tutorial. Instead of calculating the exact number of days between dates, you might sometimes want to calculate the fraction of a year or the number of years between two dates. So the yearFrac function calculates this fraction of a year between the two dates based on the number of whole days using the start and end date arguments. For example, 8% of the year exists between September 1st, 2018 and September 30th, 2018. So please pause the video here and watch the video tutorial on yearFrac and then come back to the PowerPoint, please. Next is extracting day, month, and year. In some cases, you might want to extract part of the date, such as just a month, day, or year. For example, if you own a wedding catering business, you might review historical data to identify which month had the most weddings to cater. To do so, you would extract the months from the dates when you catered the weddings. So the day function displays the day within a given date. The month function displays a month, and the year function displays the year for a specific date. So if you want to enter a date directly into an argument, you must enclose the date in quotation marks, okay, such as down here below. But most oftentimes we'll be using a reference cell. Anyway, so pause the video, PowerPoint video now, and please go and watch the video tutorial. And when you're done that, you can come back to the PowerPoint. Next, we look at creating a nested logical function. If function contains three arguments, the logical test, the value if it's true, and then the value if it's false. So again, that's the test, the if test. And then what happens if it's true, and then what happens if it's false. You can enter the formulas within both the value if true and value if false arguments to perform calculations. So in here, value if true, you can put formulas in here, okay? Not just the value, you can put a formula in there, and same as in the false. So for situations with multiple outcomes based on conditions, you can nest if functions within the value if true and value if false function arguments. For example, if you have the first if function here, the logical test, if something, and then in the value if true, you can nest another if function in there, okay? And same as if value if false, if false. So nested function is that is embedded within an argument of another function. Okay, that's what nested function is. It's a function that is inside of an argument of another function. You can nest up to 64 if functions in the value of if, value if true and value if false arguments. So, for example, if you want to calculate bonuses for employees based on hire date, and you've divided the hire dates into 3 timelines. So if hired before January 1st, 2010, if hired before if hired before January 1st, 2010, the employee receives 9% of the salary. If hired between 2010 and 2015, employee earns 5%. If hired after 2015, then the employee receives 3%. Okay, so this scenario has 3 possible outcomes for calculating bonuses. So you use logical tests for 2 of the outcomes. If both the logical tests are false, then the third outcome is the result. So there we have here value if true. So if hired before January 1st, 2010, if it's true, then you just get 9%. You go straight there. If it's false, if it's not hired, if the employee is not hired before 2010, then go here and then test again once more. Is it hired before 2015? Then if it's true, then it's 5%. If not, then it means it's after 2015, then it's 3%. So please pause the video right now and watch the video tutorial on the nested if function, and then come back to this PowerPoint when you're done. The next function we'll look at is AND, OR, and NOT functions. Excel contains 3 logical functions to determine whether certain conditions are true or false. These functions are AND, OR, and NOT. You can use these functions to test a logical condition and display either true or false in the cell. Okay, so for the AND function, in some situations, you might want to know if the combination of 2 conditions is true or false. So for example, you might want to include a column to display true if the employee's title is a manager and he or she earns less than $70,000. Then the AND function accepts 2 or more logical tests and displays true if it's all met. So if the employee is a manager and earns less than $70,000, then it's true. Then you get a result of true. Okay, so the function would look like this: and then the first test, and then the second test. So the truth table, you can create a truth table to help analyze the conditions to determine the overall result. A truth table is a matrix that provides the results, like true or false, for every possible combination for AND, OR, and NOT criteria combination. Now the OR function. Unlike the AND function, where all the conditions must be true, the OR function evaluates to true if any of the conditions are true. It returns false only if all the conditions are false. For example, you might want to identify employees who are either managers or earn less than 70%. So if they're either or both, then it will be true. Then we have the NOT function, which might be a little bit confusing. The NOT function evaluates only one logical test and reverses the truth of the logical test. Okay, so if the test is if the manager is not, if the employee is not a manager, then it will return the result of true. It is true that the employee is not a manager. Then it's true. If the employee is a manager, then it'll be false because the statement the employee is not a manager is false. Okay. When you look at the video tutorial, you see that Adam is a manager. So when you test Is he not a manager? Then it would be false because he is a manager. So now please watch the video tutorials on the and, or, and not functions. And when you're done, you may come back to this PowerPoint. All right, the next PowerPoint slide, we're going to look at using advanced lookup functions. So you have used VLOOKUP and HLOOKUP functions before to look up a value and compare it to a lookup table and then return the result from the lookup table, right? So the two other lookup functions that we are going to use in this chapter is index and match. So using the index function, when you work with a data set, you might want to display the content of a cell in a particular column or particular row. For example, if that list contains agent names in the first column and then there's sales in the second column, you might want to know the sales amount for the person in the third row. Then you can use the index function to return the value at that intersection at a specified row and column. Okay, so for example, it would look like this. You have the index and then you have 3 arguments, array. So array is, one or more ranges. So the whole range of data that you're going to look at. Okay, and then you have the row number. This specifies a row number within the array. Okay, then you have the column number. Okay, the column number identifies a column which the reference that contains the value that you want. Okay, so if you have array of A1 to B5 here, this whole array, and then you want row number 3 and column number 2, then we'll go row 1, 2, 3. So rows number 3 is Kenneth, okay, and then column number 2 would be the amount, okay. So the index function finds the intersection of the third row and the second column in the array. So it depends on which array you started. So if you started from A1, then we'll go down 3 rows from A1. But if you start from A2, then we'll go down 3 rows from A2. Okay. In this case, we started from A2, not from A1. So A2 to B5. Then it will go 1, 2, 3. We'll go to Kenneth, and then it will go to column 2 and look at 8, 4, 5, 4. All right. So here, please watch the tutorial video on how to use index function. And when you're done, please come back to the PowerPoint. All right, so next we're going to look at using the match function. You might want to look up a particular value, but you don't exactly know where it is located in a data set. You can use the match function to help look for the position of the data you want. So the match function searches through a range for a specific value and then returns the relative position of that value within the range. For example, you can use the match function to identify what rows contain the value 8, 4, 5, 4. So the match function is going to have 3 arguments: the lookup value, the lookup array, and the match type. Okay. So I have the value first. So the value is the value that you want to find. So 8, 4, 5, 4. So you want to look for this value here, 8, 4, 5, 4. The lookup array is the range that contains the data set. So it would be it would be B2 to B5. So this column here. Somewhere in here, there's 8, 4, 5, 4. And then the match type, arguments 1, 0, or -1 to indicate which value to return. So use 1 to find the largest value that's less than or equal to the lookup value. When the values in the lookup array are arranged in ascending order. Use -1 to find the smallest value that's greater than or equal to the lookup value when the values in the lookup array are in descending order. If you want to find the first value that is identical to the lookup value, then use 0 when the lookup values are not in any particular order. Okay. So in this case, we'll use 0 because the values are not in any particular order and you want the exact match. Okay, so you want to look up 8, 4, 5, 4. So you type in the B2 to B5 as first you type in, B7 here, which is the value you want to look up. Then you type in the array, or you select the array, which is B2 to B5, and then the match type, which is 0. And you might be wondering, why do I need to do that? I can just see it right here. It's because, imagine if you have a column full of like 5,000 rows, you're not going to go through each row to look for it, right? So you can use the match function. Okay, so please watch the video tutorial and pause the video and come back to it when you're done. Next, we look at creating a nested function. You can use the results position of a value from the match function as an argument within the index function to identify data related to the matching value. You can use 3 separate functions to identify a label related to a value. So you can use max to identify the highest sales. You can use match to use the results from the max to find the position of the highest sales. Then you use the index to use the position returned from the match function to identify the agent responsible for the highest sales. Okay, so basically what we're trying to do here is we want to use a nested function to make the index and make use of the index and the match functions, because on their own the index and the match functions are very interesting, right? They don't really seem to be that useful, but they become really useful when you're nesting it inside of another function. Okay, so please watch the tutorial on how to use the nested function in utilizing the index and match functions. Next, we have database filtering and functions. Database store and manipulate data, such as inventory details about automobiles at a particular dealership or financial transaction details for your credit card. You can use Excel for database storage and manipulation. You have some experience in using Excel tables to perform basic database tasks like sorting and filtering data. Now you perform more advanced filtering and calculations. You'll learn how to use advanced filtering techniques and then also insert database functions. Okay, so data becomes more useful in decision making when you reduce the records to a subset of data that meet specific conditions. Like you have a whole bunch of data, right? But then maybe you're only interested in data that meet specific conditions. Like maybe you're only interested in data about managers and managers that are located in New York. So you need to extract that data somehow, right? So the manager can use the filter arrows to filter the data by job title, salary, location. Excel filters the original data set by hiding the records that don't meet the conditions. So you have learned how to use the filter before. But sometimes it might be important to keep the original data set visible as it is and only create a copy of those records that meet these conditions in another place. So to do so, you can use advanced filtering techniques. So that's what we're going to learn, advanced filtering techniques. Number 1, you have to define a criteria range. Before you apply advanced filtering techniques, you must define a criteria range. So a criteria range is like a group of 2 or more adjacent cells that specifies the conditions used to control the results of the filter. So it's a criteria. The example I just give is, must be a manager and must be based in New York. So that's my criteria range. Okay. The criteria row is often below the data set. So you have this, all this data here, and then below it, you will have a criteria row. The criteria range, again, must have at least 2 rows and 1 column. The first row should contain the column labels as they appear in the data set. The same way the data set has the labels, the column, the criteria row range must have the same labels, otherwise the whole thing won't work properly. Then the second row contains the conditions, filtering the data set. Next, you're going to apply the advanced filter. So after you create the criteria range, you're now ready to apply the advanced filter using the advanced filter dialog box. This allows you to filter the table in place or copy the selected records to another area in the worksheet, and here you can specify the list range, specify the criteria range, or display unique records only. Anyways, that's a lot of talking, and without actually seeing it and doing it, it might not make that much sense. So please watch the video tutorial, and hopefully what I explained to you will resonate with you as you're working through the tutorial or watching the tutorial. So first, you need to define your criteria range, okay? Don't forget about that. Next, we look at manipulating data with database functions. Database functions are there to analyze data for selected records in a data set. So the functions are similar to statistical functions like sum, average, max, min, and count, except that the database functions restrict the results to the data that meets the specific criteria. Okay, so it's not going to look at all the data in your table. It might only look at the data related to the criteria that you have set. For example, it will only look at managers from New York. Okay, so data not meeting the specific criteria are filtered out. So if it's a sales rep from Texas, then it will not be considered in this function. Okay, so all database functions use a criteria range that defines the conditions for filtering the data to be used in the calculations. They will have 3 arguments, so the database, the field, and the criteria. Okay, so the database argument is the whole data set, including the column labels. So make sure that you include the column labels, like the descriptions at the top, and all data on which the function operates. Okay. The field argument is the column that contains the values operated by the function. You can either enter the name of the column label, such as salary, or the number that represents the location of that column in the table. Okay. Then the criteria. The criteria defines the conditions that are to be met by the function. Okay, so this range must contain at least 1 column and 1 cell below the label. So just like before, okay, same rules as before. The criteria argument may include more than 1 column with conditions for each column label. Okay, it might be a whole range. Okay, might not. You can have more than 1 criteria is what I'm saying. Okay. So database, easy enough, is what you're selecting, the whole table, right? And then the field is what you're trying to have sum of or average of or count of. For example, maybe salary. Okay, so the criteria is, the example I've been giving is managers from New York. Okay, so what it's going to do is search the whole database, like the whole table of data, and then according to the criteria, managers from New York is going to find maybe the sum of all the salary of the managers from New York, or the average of salaries from managers from New York, or count how many salaries there are of managers from New York. Okay, so that would be the field, would be the salary. You can use DSUM and DAVERAGE functions. So now I'm about to go into the different database functions. Okay, the DSUM is a database function that adds the values in a column that match conditions specified in a criteria range. The DAVERAGE determines the mean, average, or values in a column that match conditions in a criteria range. Okay, the DMAX looks at the highest point in the column that matches the criteria. The DMIN identifies the lowest value that matches the specific conditions in the criteria range. And you can also identify the total number with DCOUNT. Okay, DCOUNT is a database function that counts the cells that contain numbers in a column that matches the specific conditions in the range. Now, if one of the records is missing a value, DCOUNT excludes that record from being counted. For example, if one of the managers from New York doesn't have a salary entered in it, then DCOUNT excludes that record. Okay, so it doesn't count that manager. So after completing DCOUNT, you might decide that you would like to change the match conditions. You can do so by altering the information entered in the criteria area. Anyways, to count the records containing the empty cell, use DCOUNT A. Okay, for example, if you do want to include that manager from New York that doesn't have the salary entered, then you would use DCOUNT A instead of DCOUNT. And again, the arguments is database, field, and criteria. All right, and now you are ready to watch the video tutorial on database functions. And when you're done, please return to this PowerPoint video. Next, we're going to look at financial functions. Excel's financial functions are helpful for business financial analysts and, and for you when you're doing personal financial management. So knowing what different financial functions can calculate and how to use them will really help you as you plan for retirement savings. I know it might seem like a long time away, but if you're if you are thinking about it, you can use it for retirement savings or just for budgeting, or maybe buying planning to buy a house or planning for your mortgage, identifying the best rates to obtain your financial goals, evaluate how future values of different investments compare with today's values. So if you know all these financial functions, it can really help you with your own personal planning of your finances. So in this section, you're going to learn how to prepare a loan amortization table using financial functions. You also use other financial functions to complete investment analyses. So using financial functions, the financial category in your Excel functions includes a variety of functions to calculate details for investments. For example, you can calculate present or future values or rates or number of payment periods. Some of the arguments for PMT are similar to the arguments for other financial functions. So we'll start with the PV, which is the present value. The present value function calculates the total present value, so present meaning the current value, today's value of an investment with a fixed rate, specified number of payment periods, and a series of identical payments they'll be making in the future. Okay, so this function illustrates the time value of money, which the value of $1 today is worth more than the value of $1 received sometime in the future, given that you can invest today's $1 to earn interest in the future. So $1 today, like today's date, if you have $1, that is worth more than having that same $1, let's say 20 years from now. Okay, that $1 today will be worth more than $1 in 20 years time. Okay, so for example, you might want to use the PV function to compare a lump sum payment versus annual payments if you win the lottery to see which is better. For example, is it better to receive $100,000 per year for the next 20 years or to receive $1 million now? So which is better, which gives you more? So there's 3 required arguments. The PV function has 3 required arguments. First, the rate, and then you have the NPR and the PMT. The rate, NPR, and PMT and type arguments have the same definitions as in other financial functions. So all financial functions, you have things like rate, NPR, type, things like that. They're all sort of are the same thing. The PMT argument is the fixed periodic payment. Okay. The future value argument represents the future value of the investment. One thing to note, and I've mentioned this before, is the negative sign in functions. So for many financial functions, the calculated results usually display as a negative value. So the negative result occurs because Excel interprets these calculations as a negative cash flow, like they see it as money leaving your account. So to make the results easier to work with, a negative sign should be placed after the equal sign when you enter the function or before any of the arguments, so that the results display as a positive result. All right, so you want to pause the video right now and please watch the tutorial. And when you're done, you can come back to the PowerPoint. Next is the FV function, or the future value function. This calculates the future value of an investment given fixed interest rate, term, and identical periodic payments. So use the FV function to determine how much an individual retirement account would be worth at a future date. Okay, there's three required arguments. The FV function has 3 required, okay? The rate, NPR, and payment, and 2 optional arguments, present value and type. If you omit the PMT argument, you must enter a value for the PV. Okay, so for example here, FV, future value, the rate, NPR, and payment, PV, and type. Okay, so if you don't have the PMT, you must have PV, present value. Assume that you plan to contribute $3,000 a year to IRA for 40 years, and that you expect the IRA to earn 7% annually. The future value of that investment, the amount you have 40 years later, would actually be this amount. That is the future value. Okay, so that's a future value. If you're going to give $3,000 a year for 40 years at an interest rate of 7%, that is actually worth this amount down here, $598,905.34. That's what it's worth in 40 years. So please pause now and watch the FV, future value tutorial, and come back to this PowerPoint when you're done. The NPV function is next. The NPV function calculates the net present value of an investment given a fixed rate and future payments that may be identical or different. It considers periodic future incomes and payments. So the NPV and PV are very similar in concept. The difference is that the present value function, the PV function, requires equal payments at the end of a payment period, but the NPV function can have unequal but constant payments. Note, it must be constant. It could be unequal amounts. So the two required arguments are rate and value 1, and additional options such as value 2. So if an investment returns a positive net present value, the investment is profitable. So an investment returns a negative net present value, the investment will lose money, basically. So the rate, again, the arguments here is rate, value 1, value 2, and so on. Rate is the interest rate for one period. It's also called the rate of return or the percentage return on your investment. So if an investment pays 12% per year and each period is 1 month, then the rate is 1%. Okay, the value arguments represent a sequence of payments and income during the investment period. So to provide an accurate NPV and net present value, the cash flows must occur at evenly spaced intervals, okay, and must occur at the end of each period. Now please watch the video tutorial to learn how to do NPV functions. Next, we have NPER and rate functions. So in some situations, you may have a payment goal and know the stated interest rate, but you need to calculate how many payments you need to make. In other situations, you may know the payment and number of payments, but you need to calculate the rate. So the NPER and rate functions are then useful in these situations. Okay, the NPER function calculates the number of payment periods for an investment or loan given a fixed interest rate, periodic payment, and present value. So you can use the NPER to calculate the number of monthly payments given a car loan of 30% and APR 5.25, monthly payment of $694.28. The NPER function contains 3 required arguments. So the rate, payment, and present value. And then you have 2 optional, future value and type. So NPER is rate, okay, payment, and present value. Next is the rate function. The rate function calculates the periodic rate for an investment or loan given the number of payment periods, a fixed periodic payment, and a present value. So use rate to calculate the periodic rate of a 4-year car loan of like $30,000 and monthly payment of $694. So the rate function is going to contain 3 required arguments, the NPER, the PMT, and PV. And then again, 2 optional arguments, okay, FV and type. Please watch the video tutorial on how we enter these values into the arguments for this function. And come back to the video when you're done. Next, we have the loan amortization table. So to see the interest and principal portions of each monthly payment and the reduction in the loan amount, you can create a loan amortization table. So a schedule that calculates the interest per payment period, principal repayment for each each payment, and remaining balance after each payment is made. In the tutorial video, I show you what the loan amortization table looks like. And after I show you what the loan amortization table is going to look like, we also look at the functions IPMT and PPMT. This helps to fill up the loan amortization table. So the financial category also contains additional functions to calculate results for loan payments, IPMT and PPMT. You can use these functions in isolations or within the body of a loan amortization table if the table does not allow additional principal payments. If the loan amortization enables you to pay additional principal, these functions won't provide accurate results. So the IPMT function. The IPMT function calculates the periodic interest for a specified payment period on a loan or an investment given a fixed interest rate, specified term, and identical periodic payments. So the benefit of this IPMT function is that it identifies the interest for any given payment without having to create an amortization table. The IPMT function has 4 required arguments and 2 optional arguments. IPMT looks at rate, PER, NPER, and PV, FV, and type. Right now, you are ready to watch the tutorial video, and when you're done, please come back to the PowerPoint. All right, so we're going to next, and I think this is the final thing we're doing in this PowerPoint tutorial or PowerPoint video, is to calculate the cumulative interest with the CUMIPMT function. Okay, the IPMT function calculates the amount of interest paid in one particular loan payment, but it doesn't determine the amount of interest paid over a specific number of payments. Okay, just one payment. So use the CUMIPMT function to calculate the cumulative interest through a specified payment period. It accumulates the interest paid between selected payments throughout the entire loan. So it's got 6 arguments: rate, NPER, PV, start period, and end period, and type. So rate, NPER, PV, and types are the same arguments as in IMPT and PPMT. The start period specifies the first period that you want to start accumulating, and the end period specifies the last payment that you want to include. Okay, and next we have calculating cumulative principal payments with the CUMPRINC function, CUMPRINC function. Okay, cumulative principal function. To calculate the cumulative principal through a specified payment period. So this function accumulates the principal repayment between selected payments or throughout the entire loan. For the first payment, the cumulative principal is paid is the same as the first principal payment. If you don't want to calculate a running total for the entire loan, you can specify the principal payment between 2 periods, like period 13 and 24, to calculate the total principal paid for the second year. So if you're just interested in the second year, you can adjust the payment periods 13-24, right? So it contains 6 arguments: rate, NPER, PV, start period, end period, and type arguments. They're the same as in the CUMIPMT function. And now you are ready to watch your final video tutorial for this chapter. And please do your exercises, your hands-on exercises, when you're done watching that tutorial, and please complete your quiz as well.